Okay, and I wanted to also show you this chart which I created. This was published back on May 23rd to TradingView, and so what I was trying to do in this chart was to capture what I thought was going on in the NASDAQ, and what happened after the double top. I was not, I'm going to be honest, I was not expecting this double top in the market, which took place. The high reached the high here at 14,211 is the high in the market, but that was very close, within 20, 30 points of this high back here. And so, of course, a double top in a stock or a market is significant because it can lead to some significant drops. It's a powerful psychological factor for investors to see that a certain level has been, an attempt has been made to break it twice and it fails. Well, one thing more significant than that would be if the market approached that level and fell a third time. You'd have a triple top, and that would be not so good for the NASDAQ, and that's kind of what I'm a little bit worried about now. So what I'm going to do is show you this chart. If you look here at this, well, I'm not sure why, but I've got two lines here, but they're both very similar. But basically, you've got a COVID, I call it the COVID recovery trend line. So after the crashes in, looks like March of last year, when it reached the very pits of Dante's Inferno, you all probably remember those days when you had, stocks on one of the biggest fire sales that you're ever going to see in your life, probably. And so it reached these levels and then slowly, returned. It returned to normal after the Fed stepped in and, started pumping money into the system. And so things just started to recover back up. And it followed what I think is roughly this trend line. And so after the market reached the double top back in April, which is right here, it fell back down to around what I'm going to call S1, which is the 13,000 level. And then it slowly began to recover. It moved back up. And what you'll notice here, and I identified this on May 23rd, so a few weeks ago, that the NASDAQ, I predicted, and I think at that time it was somewhere around here, but I predicted the NASDAQ was going to run into some real resistance when it reaches this red zone right here, which is a convergence between significant support at around 13,600. So you see it here, that you've got some significant support right around this level. And that's what's happened. And also between the other converging resistance between that and the COVID recovery trend line, which is right up here. So that's what happened. It slowly moved up, slowly moved down. It's just really struggling to find any steam in this area. And what it has done, as you can see here, is just skirted right along that trend line. And it has not broken really significantly above it. It potentially, depending on how you draw the trend line today, was up over 100 points today on June 10th. And it may be slightly above it in the close. Even so, even once it breaks that, it then converges between what's another resistance line here at R2, which I don't have the blue line drawn in there, but that and the trend line here. So I think what could happen if it does break this trend and moves back up here in the coming days, weeks, whatever it takes to get there, that's really the make or break point. If it reaches that point and then heads back down before it breaks it, I think we could be in for significant fall, even something like this, maybe even more. We could be down here at the S3 level. We could be down here at the S4 level, which is prior support. And then we've got also this trend line here, which is, I identify this as more of a longer term trend for a few years. Once the recovery took place and the Fed started pumping money, you had a higher rate of growth in the market in the NASDAQ that just started taking place than you had before, which really was taking between kind of this channel right here. And so if it fell back down to that level, you're looking at, I don't know, the 11,000s. It could fall back even beneath that and hit in the 10,000s. At this prior support level right here, which looks to be very strong, by the way, S4. I don't expect that it would fall that low, and I certainly don't expect it would fall back into this channel. It could. It could. If it reaches a triple top, that's a powerful psychological indicator that the market has reached a top, and it could completely change. There are a couple of options. It could change the rate of growth in the market. It could return to could trade sideways for a while and then grow more slowly, or it could start a new downtrend for a while. And that could be for weeks, that could be for months, that could be for years. We just don't know. I'm kind of bullish on the market myself. I like to think that there's a good chance that it's going to break up through this. Markets, one principle in the background is that, and one of the reasons I did not pay as much attention to the double top here, I thought, okay, it's a double top, so what? It'll pull back a little and then it'll move on up, which is what it may end up doing, but it fell significantly back down to 13,000. That was very painful for a while. But a double top in the market is not necessarily as significant as it is in an individual stock. Markets have an inherent buoyancy and an inherent tendency to move up and just keep moving up, more so than individual stocks. So you had the market reach a double top here, which looks like it formed back around August of last year until like October. And then it moved on up. It finally moved back up past this point somewhere around November of last year and just kept moving up. So we could see something like that again. We could see it keep moving up, but I think it's important and critical to watch in the coming days and weeks, what happens when the market reaches the 14,200 level and slightly above that. And resistance is a zone, so it's not necessarily the market might not reach 14,211, or it might go slightly above it, just as this one, as you can see here in April, was slightly above this prior high right here, which which is back in February. So watch that very carefully. If it does break this trend line, you're going to encounter some strong resistance around 14,211. I've noticed today the MACD, not that I worship indicators or follow them religiously, but the MACD has been kind of declining on the NASDAQ. So if you've got a declining MACD, it went up, today was a bullish day, especially on the large cap stocks. But I just worry if the MACD things are sort of losing steam here potentially. It's really having trouble breaking through this trend, which is resistance. And if it does, it's going to encounter another one there, and it could pull back. A third top in the market would be significant. I think even more significant. You'd very likely see more pain than you saw back in April with some of these tech stocks. And you want to add to that the fact that today there was some, that significant news on inflation. Inflation is higher than it was expected before, higher for the last month than was projected. So prices are increasing. The value of the dollar is decreasing. You've got the president proposing a $6 trillion budget, which is very significant. We've already had multiple stimulus packages. You're looking at potential for real inflation, that we could hit a period of real inflation for a period of time, whether it's months, years. We could be running into that. And that really discounts the value of the future cash flow of some of these businesses that are not yet profitable, and they're already at really high PE ratios. And the NASDAQ is very heavy with these. So we could be looking at a top of the NASDAQ. And so I'm not saying that's going to happen. I'm just saying watch for it to break the 14,211. Notice here there was a tendency, I think, in investors, because this is above the trend line, the market just kept going up. You're in a different situation once you reach psychologically. Once you're under the trend line, once you're showing that weakness, you've broken under the trend already. It could be a time that investors are saying, okay, we are near the top of the market. There's a lot of talk of the market being at the top and the bull run being over. I don't know if that's true, but it's psychologically powerful, and it can mean that once we get up in this area, investors just start taking profit. And if that happens and you've got a third top, I just say kind of watch out. But I wanted to give you this chart to kind of give you a rundown of where the support areas so you can know your buying opportunities if this thing does reach a triple top and falls back down more significantly. So let's hope that doesn't happen, but it's always good to be aware. So I just wanted to make this video to kind of update you on my thoughts on the NASDAQ, and hope everyone has a good trading time, and be careful out there. It could get rough in the coming weeks, but let's hope not. All right, good luck with your trading. Thanks.